Splendid evening it is to viewers. Welcome to Equity News on Equity Access, your aerial perspective of stock market developments and of developments in the Zimbabwean economy. Thank you for joining us as we broadcast live from Hampton Studios. I'm Eben Mabunda. Let's get started. President MNANGAGWA says Zimbabwe has enough coal to last more than 1,000 years. This is said during the signing of a coal mining deal between the Zimbabwean government and Victoria Consultancy of India, which government says will see a boost in exports to India as well as Japan. This comes, of course, as the country grapples with excessive load shedding and, of course, power cuts that have resulted in that, characterized by declining water levels at Kariba as well as aging equipment in Hwange, where the country has huge supplies of coal in that regard. Well, we've got visuals courtesy of ZIMI that give us feed into what transpired during the course of the day. So let's have a look.
The current extraction rate will last 1,000 years, more than 1,000 years. So I was thinking, who in this room is So we are witnessing an event which will outlive us all. And it's very rare that these things happen. So to those who will still be around at that time, they should be grateful that we started the journey. And at that journey, I was present. Beyond that, they also mentioned that India consumes around 52 million metric tons of coal per year, which means India consumes 1 million metric tons per week. So every week there's a consumption of 1 million metric tons of coal. I don't know how many million tons of coal we produce.
2 million tons per year.
I think when we are talking about consumption of coal, the Indians are around. So you can see the huge potential where we currently are only at the level of 2 million metric tons per 52 weeks, which means our coal can be consumed in 2 weeks and you're done. I believe that you should aim to at least have 10 weeks. That would mean 10 million metric tons, and begin working on how to reach 10 weeks. Because at least you would be able to say, well, I think I contribute. Because if you are contributing only 1 week in 52, what percentage is that? But if you grow up to 10, perhaps it can become, you can also put on a tie. Go to other people and say, I contribute 10%. But with what you are doing now, but of course you have said that by 2023, the entire mining industry will be a 12 billion mining industry in Zimbabwe. But you can see the opportunity of actually going beyond 12 billion. Here's an opportunity where you can grow the mining industry
As power issues continue to embattle the beloved jewel of Africa, ESKOM confirms settling a payment plan with ZESA. The plan will see government paying $890,000 per week in payments to ESKOM. However, ESKOM says it will resume exports to Zimbabwe when ESKOM has enough power for South Africa. This seems a contrary report to what the Permanent Secretary in the Ministry of Finance, Dr. George Gwamatanga, said at a post-budget review held in the capital on Monday, when he said that the situation in Zimbabwe should improve effective Wednesday, which is right today. As we make progress, gold deliveries to Fidelity printers for the first half of the year dropped 9% to 12.3 tons compared to the same period last year. The drop is attributable to power outages and unreliable supply of diesel for producers. Gold is Zimbabwe's largest forex earner, raking in $1.2 billion in 2018. Last year, Zimbabwe produced an outturn of 33.2 tons of gold, and this year government set a target of 40 tons of gold. And with what has played out in the first half of the year, it seems apparent that we may not be able to reach even last year's target. Hence, the 40-ton target could be very much ambitious. NETONE announcing that it will be increasing data and SMS bundles effective Thursday, the 8th of August 2019. This follows a similar move by another state-owned mobile operator, TARIFFS, a few weeks ago. Now, this concludes our evening news bulletin. Up next is a look at the news review. Don't go anywhere.
Climbing to the top takes more than just hard work and smart choices. It's the passion that drives you from within, the endurance to keep going through difficult times, and having a very clear vision of how to succeed. That's what we strive for at CBZ. We're a diversified and innovative listed financial services group in Zimbabwe, with a complete range of activities, including banking, short and long-term insurance, asset management, and property investments. CBZ has been a pinnacle for stability in the economic landscape of Zimbabwe, stemming from our deep-rooted values, our excellent customer service delivery, and our corporate vision to strive for excellence as a global competitor. Our continuous investment in research and development will cement our promise to provide customer convenience utilizing state-of-the-art technology. Relationships are at the core of what we do. We understand, however, that strong, long-lasting partnerships are not built overnight. With over 3 decades of wealth management, we have come to understand our clients and their specific investment requirements. Our unique mix of skills ensures that investment opportunities are examined from all perspectives. The balancing rocks of Zimbabwe have weathered the elements for thousands of years and stood the test of time, like majestic reminders of the fine balance of nature. They challenge our perception of what is possible and what endures. Just as CBZ has weathered the economic storms and remained steadfast throughout the turbulence of unsettled economies. Achieving the impossible through resilience and stability, we balance the elements of hard work, dedication, and experience, making us your ideal partner for success. Climbing to the top takes more than just hard work and smart choices. It's the passion that drives you from within, the endurance to keep going through difficult times, and having a very clear vision of how to succeed. That's what we strive for at CBZ. We're a diversified and innovative listed financial services group in Zimbabwe, with a complete range of activities, including banking, short and long-term insurance, asset management, and property investments. CBZ has been a pinnacle for stability in the economic landscape of Zimbabwe, stemming from our deep-rooted values, our excellent customer service delivery, and our corporate vision to strive for excellence as a global competitor. Our continuous investment in research and development will cement our promise to provide customer convenience utilizing state-of-the-art technology. Relationships are at the core of what we do. We understand, however, that strong, long-lasting partnerships are not built overnight. With over 3 decades of wealth management, we have come to understand our clients and their specific investment requirements. Our unique mix of skills ensures that investment opportunities are examined from all perspectives. The balancing rocks of Zimbabwe have weathered the elements for thousands of years and stood the test of time, like majestic reminders of the fine balance of nature. They challenge our perception of what is possible and what endures. Just as CBZ has weathered the economic storms and remained steadfast throughout the turbulence of unsettled economies. Achieving the impossible through resilience and stability, we balance the elements of hard work, dedication, and experience, making us your ideal partner for success.
Back viewers, it's now time for news review, and with me on set is economist Tinashe Kado. Tinashe, good evening and welcome to the show.
Good evening, Ibn. How are you today?
Very well indeed. Yourself?
I'm well.
Beautiful. Now the president comes through to say Zimbabwe has called to last us more than 1,000 years. Of course, this is the signing of an interesting deal between the government of Zimbabwe and Victoria Consultants, which is based in India. Government says this could ramp up our coal exports. How important is that particular development?
I think the signing of the deal is something of significance to the economy. If you consider, the untapped nature of that coal resource. Currently, we have, I think about 4 operating mines or 4 coal miners, which is your Makomo Resources, which is actually the largest producer in terms of coal tonnage. Then Wanke Colliery, there is Gaupex, and there is another Chinese player there. So they're coming in on board of this Indian investment. If it actually comes on board, I think that is something positive to the economy. But what we should do maybe as a country is maybe to diversify in terms of our markets. Much of our coal that we produce is they rely much on one a single customer, which is your ZESA for power production. Then we export a bit to ESKOM South Africa, then a smaller portion to Zambia. So I think what the government should do is maybe to unlock more and more markets such that we have a bit more lucrative prices thereabout.
But look, we're talking about exporting coal. That's government's target. Government wants to export coal. Should we not be thinking about exporting electricity? I mean, we are currently grappling with power issues which have got twin pivots of water declining in Kariba and aging equipment in Wange. Should we perhaps not be thinking along the lines, okay, what can we do as a nation to increase capacity in Wange so that we become an export hub of electricity? Because look, this is the 21st century, 2019 for crying out loud, where the world is moving toward alternative sources of power. But no, not quite. Government is concerned about exporting coal. What is your comment where that is concerned?
My thinking, if you look at the global trends in terms of a shift towards renewable energies, I think the consensus among global players is that in this era we should now focus on more energy sources that are environmental friendly. And unfortunately, coal is not in that bracket. We have seen even in curing tobacco, the international players, they are now saying that tobacco that has been cured using coal shouldn't find its way into the market. So we are looking at a space where more and more countries are concerned about that climate change and all those adverse effects to the climate that result in pollution. And coal is one of those minerals that are affected. We have seen even Mozambique, when it was trying to develop its Tete province, that a major coal resource export, where Vale wanted to export that coal to Brazil. We have seen the country facing so many challenges in something like that. They had to create its own port hub to handle that coal tonnage. Then for us, I think the challenge that we still face is that inadequate infrastructure. You look at coal; those are high volumes and high mass commodities, which means that our rail system should be a bit more sophisticated, and it should be efficient for us to be able to export that resource.
Interesting. Now let's talk about, although the figures are not yet comprehensive as yet, we just got perhaps a sneak peek into the figures. Gold figures for the first half of the year down a good 12% against last year's performance. How important is that, considering the fact that Zimbabwe last year exported and, or should I say, produced a good 33.2 tons. This year's target being set by government 40 tons, and gold is responsible for having raked in a good $1.2 billion in 2018. How important is that particular development?
You look at gold is, one single, a very important key resource in the economy as far as foreign currency generation is concerned. You look at what's happening over the past 6 months or the first 6 months of the year. We have seen that production was a bit depressed, especially for gold. The issues there that are coming in for gold miners is escalation of costs among primary producers who used to do the majority or the major share of production. We have seen those primary producers, the likes of your Metalone, the likes of your Riozum, they have scaled down in terms of production. One of the issues was disgruntlement just because of those foreign currency retention by the central bank, where 55% of exports has to be surrendered to the central bank. Then 45% has to be surrendered to the central bank, then the remainder deposited or converted to local money. All those things, they discourages production. We have seen also escalation of costs because of this energy crisis that we're experiencing. Then also that high fuel cost as well as shortage even of that fuels. Excavators, they run on diesel, and that those increase in diesel prices and even shortages of diesel prices, they've built in to cost buildup, which is actually an issue in terms of production. Then also the small scale producers who have lately have been now the major driver to gold supplies or deliveries at Fidelity printers. What was happening is, in terms of the increase in volumes supplied by your small scale, it was more like an issue that coming out of formalization of their operations. So I think the broader macroeconomic challenges that we are facing are the real issues that are also affecting gold production and other key minerals. I know for the month of June, in terms of exports, gold came second. Nickel was the outperformer. There was the number one commodity that we exported. Then yes, of course, followed by gold. Why that slowdown in exports of gold is just because of all these broader macroeconomic issues.
But really, what does this mean for Zimbabwe going forward? I mean, it's been quite a turbulent ride. Zimbabwe is still pretty much in turbulence. And then, of course, while I'm asking that question, I also want to throw in an interesting development. We saw the former finance minister, Honorable Tendai Biti, tearing down at the budget presented by the incumbent minister, Professor Mthuli Ncube, highlighting certain issues, saying, look, we cannot be boasting of a surplus at this point while certain issues remain unaddressed in the economy. What is your comment where that is concerned? On the one hand, you have export drivers on a low, and on the other hand, you have turbulence playing out in the economy. Your comment?
You've seen, from the latest Zimstat numbers, we've seen that, the trade deficit, yes, widened in the month of June. Then cumulatively, I think trade deficit we are sitting on, negative $660 million. But it's an improvement if you consider the 5-year average, where we were experiencing, a deficit free of around at least $1 billion US. But my concern is, these two issues that we are facing, these two structural issues where we have a current account deficit as well as a fiscal deficit. Those are some of the issues that we are affecting our economy. But my major worry is in terms of policy itself. The main problem, the real cause or the real issue that brought us where we are today, it's not because of fiscal indiscipline or these monetary issues as we are trying to correct, or the market failures or something like that. It's not. The real issue is weak institutions. Weak institutions. I have to stress that. Why I'm saying weak institutions? If our institutions were strong, when the government wanted to borrow from the central bank, if the central bank, RBZ, was a very strong and powerful institution, it wouldn't allow the government to breach its limit, the 5% of previous year's revenue limit and something like that. If our institutions were strong, we wouldn't allow to see all these corrupt tendencies that are happening in the economy. So to me, what's happening, the issue that the policymakers should try to focus on is strengthening institution and the institutional frameworks. The problem that we are having with the finance minister right now is actually blaming the markets more than the institutions. It's trying to reform the markets first without reforming the institutions. If the markets become so powerful when the institutions are weak, it means we'll be headed back to failure. That's what's happening in the economy. So sometimes I agree a bit with what the former finance minister has raised, but he also has to understand, the power of institutional frameworks and institutional setups. Why institutions are important in terms of institutions? Those are, are the rules of the games. Those are the laws and procedures that you follow when you are trying to handle something. Those are the organizations that support your markets. Those are the organizations that also support your economy. When you have weak institutions, even a good monetary policy tool that you want to implement to correct certain measures, sometimes that policy tends to fail because of that weak institutions. You see some of the problems that we are also facing in the economy is that rushed change from more of a socialist kind of an economy setup which we experienced, during the Mugabe era, towards this new regime where we are now tending to more liberal or market-based approaches. To me, the policies that are being implemented by Honorable Mtuli, they are more centered, or they are more Western-centric, where he is trying to implement reforms in an IMF, sort of guided approach. Those Bretton Woods institutions, those are the institutions who stresses much on the liberalization of economy, on fiscal.
Are you saying that the economy should not be liberalized?
You see, if you look at on a developing country perspective, sometimes the government has to chip in somewhere. Our markets, they are weak because of weak institutions. The moment you liberalize your markets, when your institutions are weak, that's when you see, all these things that are happening in the economy. What you have to do is strengthen your regulatory frameworks, strengthen your institutions, then after that, you liberalize.
Interesting argument right there, Tinashe. Thank you so much for the perspectives. Thank you guys for staying with us. Up next is a look at the markets in Markets Daily with Anesu. Please stay tuned.
Good evening, ladies and gentlemen. Welcome to Markets Daily on Equity Access. My name is Anis Chimbum. Let's just get into it. Now, the stock market has taken its 11th consecutive session coming off on a daily basis for the all-share index and the industrials index to both mimic each other, coming off 0.98% for the industrials index to settle at 606.2 points, while the all-share index is at about 184 points. Now, top 10 index came off about 1% after having experienced an 8.84% drop in Econet share price. Top 10 index is now pretty much settled very much around about the 17% mark for the year-to-date gains. For our volumes on a day-on-day basis, volumes did go up 147%, coming up from a very low base of about 2 million, with trades coming in at around about 6 million shares exchanged on the stock exchange today. Such trades are still pretty much within the same ballpark in terms of how we have performed within the last couple of trading sessions, where traders have been trading right around about 4.5 million to about 7 million shares on a daily basis, only oscillating up and downwards from such kind of numbers. Now, for our rises and fallers, like I did mention, Econet was the worst performer today, coming off about 8%, yet Zim Papers did perform on the other end of the yardstick, coming up about 14%, while Old Mutual did add about 12.32% to its share value again, to settle at about 1,994 cents, coming from yesterday's performance. Now, this pretty much stretches out Old Mutual's share performance, actually rallied to about 14 sessions running now, with investors taking the 90-day investing period as pretty much a non-event, because of how they still feel that the parallel market, the forex markets are going to be continually weakening. Now, onto our forex markets, we also realize that the interbank rate has settled about 9.6% after having weakening about 0.94% today. Continually also experiencing a quicker rate in terms of the ask price versus the bid price, showing lack of supply, even though some banks have been pretty much openly calling out business leaders, business entrepreneurs, and all and the like, to come and get the forex that they need, as things seem to be very much seem to be very much liquid on that market. But that market seems to be tightly marked by a very tightly managed money supply in terms of RTGS, since the mop up of about 1.2 billion by the RBZ a couple of weeks ago. So that has pretty much dampened the demand for forex market, for foreign currency. Even though our trade numbers are showing us that imports have increased, yet exports have been coming off, it would be still very much worrying that our deficit has widened to about 2.5 there about today, as of yesterday's statistics, which is very worrying in terms of how we're going to be supporting our interbank or willing buyer, willing seller market there, because if we don't have enough foreign currency coming in, then it would strangle that market. For our Old Mutual implied rate, it is now up around about 16, while the parallel market settled at 10.7 today. Now, for us to give you a much more larger and better insight as to how these markets are performing, where we predict these rates to come in and settle at around about, you should be able to contact us via our administrator and operations manager, Aaron C at equityaccess.net, for you to actually put an order for the Q2 economic review and outlook, which is very much adverse but very truthful and very sincere of what has been happening. It is very weird and very concerning that you would find that a whole PhD holder was still very much very much optimistic for a growing economy only up until his interim budget, where he has now pegged us into being in a recession, where he expects the growth to be at around about negative 3% thereabout, which we still think that is very conservative of him to actually think it within that manner. But we're yet to see what kind of tricks he may have planned for us. But then it is a very tough tenure for him to go through with a lot of issues that we're facing in terms of drought, also a decline in numbers in terms of our exports, major key exports being your gold numbers coming off, also a poorly priced international market for our tobacco, even though our tobacco numbers seem to be fairly doing well in terms of volumes traded now. Now, if this continues in terms of the tobacco market, we do expect that and the stocks that were within the market in the prior season would still also be carried forward into the next season, as we did also notice that in terms of tobacco sales within the first half of the year, or rather first quarter, we were still experiencing a quite number of good inflows in terms of foreign currency within those in unregular territories of the year. So it should explain that that stock that was being carried in forward to the new season is still very much available. And now that we have almost matched prior year volumes as of day 96 today, we are still threatening next year's price by having such a large number of volumes in terms of how much we produced. China, on the other hand, they also have a lot of stock that is within their warehouses. Also, Brazil, which is another major key player within the market, is still looking at a good number of stocks coming in from the prior seasons. So the price for tobacco will be very much very dampened, which explains also why we also have a 32% decline in terms of value traded for the tobacco market, as merchants and buyers have not been very excited or keen in charging as high prices as they did in the prior year. Now, from the Equity Access team and I, do not forget to like, follow and subscribe our YouTube, Twitter and Facebook accounts at Equity Access, and do visit our illustrious website www.equityaccess.net. Good evening.